Hey there, welcome to the channel. So today I want to take a look at all right. So first of all, what I want to do here is I want to just take a look at Bitcoin. So we can see Bitcoin has just been kind of a crappy chart here. It's really gotten the crap kicked out of it. And as I've pointed out before, this thing is, it's going right down and it's really kind of breaking out to new levels. Like when I look at it, I don't see anywhere but possible support all the way down in the really going out to the 12K or the 10K level. Because, if you look at it, there's just nothing going on there. But so what I want to do here, though, is I want to kind of zoom in and look at, so there's companies like Tesla and MicroStrategy that have gone out and they've been proponents of Bitcoin and they bought a lot of Bitcoin. Now, Coinbase has released some information on that in terms of what they think they bought the Bitcoin for and how much Bitcoin they currently have. Now, this could be inaccurate, so we need to be careful, but we're just going to take it as an example and do an estimated calculation of what kind of a potential impairment they might need to write off for that. So the starting point, though, is mark-to-market accounting. So what's happening, and once again, I'm not a CPA, so you can check with them, but basically the idea is every quarter, every period, they have to mark the value of their assets to whatever the current market value is. So if I look at, and I'm going to zoom in a little bit here. And so let's say what's going on. Okay, so let's say first quarter. So here, the price of it first quarter, this is Bitcoin. So let's say the price of Bitcoin, let's just call it average 45,000. Okay, so 45,000, end of March, the value was right at the end of the quarter, somewhere in here, about the same. Okay, so there'd be very little change on that. But then if we go to the previous quarter, let's say October to December, let's see here. Well, it didn't really go good there. Let's go back here, way back to 2001. Here, if you start on January, they have to do something average or close price. So they'd be starting at 34,000, and at the end of March, it would be up here. So what would happen? Now, this is, once again, I'm not an accountant, but I have taken accounting courses and finance courses. But what I'm trying to do is just kind of give an estimate of how this might happen, what might be going on. So you could see back in that quarter, that what would be happening is that they would, if they had these on their books, they would be showing that, hey, look, I have these assets at like that currently valued at 34,000, and the value of those assets changed in, let's call it 50,000. So therefore, we record a gain, a gain of basically whatever that is, $16,000, right? So that $16,000 gain, they record that, and that becomes, basically added to their earnings. Now, what's happening over here for what's happening over here in this quarter? So now we're in April. We're looking for the April, May, June quarter, and we're trying to kind of figure that one out, like what kind of a write-off they would have. So what I'm doing is I'm using the base, and this, of course, could be wrong. I'm using kind of the base amount of Bitcoin that they have and the amount they purchased it at to kind of get an idea of how much Bitcoin they have and what kind of a write-off they would have to take in Q2. So what I'm going to use the value of 44,000, which is approximately the value at the starting of the quarter. Okay. And then I'm trying to use the current price to just kind of get an estimate of what kind of an impairment charge would be. So you can see when you have these assets that are being marked to market, when the assets are going up, you get to record this gain on them. But when they're going down, you have to record a loss on them. Now, there's all kinds of rules and stuff like that. So you really got to take it with a grain of salt. But let's go look at that. So over here, you can see that I took the two companies of interest here, Tesla, Bitcoin, and this information is probably inaccurate, but I was just reading an article about it on Coinbase, and this is the kind of the data that I got. So they're estimating that Tesla has 42,000 Bitcoin and MicroStrategy has 129,000. So, and then they estimated how much the purchase amount. Now, this would have been averaged over some period of time, but I'll just take it as it is. But actually, the purchase amount doesn't really matter at this point, right? Because I just take the the amount spent over the quantity to get the estimated purchase price. But both of these would kind of be estimating an average purchase price of 30,000, right? But now I'm going to take the price on April 1st. So this would be the start of the quarter. As I said, I'm using the start, and I zoomed in, there was about 46,299. Current price is about 22,181. So if I take that and I look at that, right now we're looking at a loss of, we just subtract those of 15,500, 15,500 approximately per Bitcoin. And if we multiply it by the number of Bitcoins that they have, then we kind of see that, okay, so Tesla is looking at an estimated $600 million charge, and MicroStrategy a $2 billion charge on a quarterly basis. So that would be for the quarter. After all their stuff, they're going to have to go minus $2 billion, minus $666 million. So let's go look at the latest quarter financials to get an idea what that looks like. Okay, looking at Tesla here, what we can see is here's Tesla quarter. So this is the first quarter of 2022. We can see all the earnings and stuff like that. So they had a gross profit of $5.4 billion. Okay, great. And total operating income from operations down here, $3.6 billion. And then they had income before income taxes, $3.6 billion. So this is the $3.6 billion the last quarter. So basically, if all those calculations were in the ballpark, they'd have to write off 0.6. So if they did the same, then down here somewhere, there would be a minus 0.6 billion. So if you look at that, kind of Tesla, it doesn't seem like a big deal for them. I mean, it could hurt, it just depends. Like if they were just scraping by with sales or whatever else, depending how this quarter is going to play out, they could really have used to not write that off. But that's kind of just an estimate. Now, Bitcoin has come back a lot, and you could do your own numbers. If Bitcoin drops to 10K or, something like that, then you could just kind of expand what that charge might be. Now let's look at MicroStrategy. Once again, looking to their latest quarterly report. This is a much smaller company. So if we're looking there, total gross profit is only 93 million. Okay, so this is kind of, keep this in mind, 93 million. Operating expenses are 263 million. So this is another one of these companies that's got huge losses on it, huge losses. So, hey, $2 billion. $2 billion charge, potentially $2 billion charge. What is that going to do to MicroStrategy? Looking at MicroStrategy, a $2 billion charge. So now maybe we can get some kind of idea looking at the financials. But remember, with the financials, what did we just see? We see a company that's losing money. So now they're kind of, they had this high stock had ramped up from the 150 all the way to 1200. So it had a really good run, but now it's just been selling off and it's back down at 150. And now you would add to that an interesting kind of thing, because now with MicroStrategy, it's like, okay, they got to write off $2 billion. Potentially, there's 100 different things. So I'm not trying to say that this is an absolute thing. The price could change before the close and the actual accounting could be different. But I'm just saying this is one of the risks that you have out there when you have a company of this size sitting on these kind of amounts of Bitcoin. This is a hugely dangerous thing to be doing. And just like we saw with Teladoc and some of those other companies that had really large goodwill amounts on their balance sheet, it's like, hey, if you have these really large numbers of things that need to be evaluated and written off, there is, there's a little bit of a risk there. So let's go back to just MicroStrategy here. Gosh, these guys just are, I wonder what their cash situation is. Cash, restricted cash. They have 92 million in cash. Gee willikers, 92 million. Now, one thing to keep in mind when they have to take a charge. So for example, if they take this charge, this is going to be it should be on the unrealized gain. This is not a cash charge. So this doesn't mean that they lose $2 billion in cash. That's not what that means at all. So that would not be the case. So it's not going to, so for example, what you would see on the next quarter is somewhere down here in the operating, you would see them add back in. Now, it might be in the operating or invest. It'd be in the investing, I think. Now, I'm not sure, but it would be in the investing. In the investing, you will see this huge loss you would see the huge loss added back in. because it's a non on the cash flow, right? Because it's a non-cash charge. Now, maybe it would be up in the operating side. It just depends where the charge comes in. But yeah, it would be added back in because it's non-cash. Now, where are they funding their losses from? So 130 last quarter they lost. Total operating is they had a positive operating deferred revenue. Huh? They got some deferred revenue and they got most of their money from digital asset impairment losses. Okay, so yeah, so look at that. Look at that. So what's happening in the MicroStrategy is they already had some impairment losses. I don't know what a digital asset is, but I assume that they're making some kind of investments in something that they value at something, and they're having to write these assets off. So whatever a digital asset is, now I don't know, is it an NFT? It could be something like that. This actually could be Bitcoin right off right here from the previous quarter. It could be that. And so, like I said, this is where it gets added back on. So yeah, so that's very interesting. But where are they getting their money? So this is not real money. They're spending money. Proceeds from secured loan term lender fees. That's where they're getting the money. 204 million. So that's where they're getting the money. So they're basically the second loan term, they're basically borrowing money to fund the losses. So that's the story with these things. Yeah, I think just, with everything going on, we just need to be careful because the Bitcoin problematic situation isn't necessarily done. Like I said, it's just this open trap door. And usually with these things, when you really have to start looking at them and say, hey, what are things really worth? What really has value? And we're getting to this high inflationary environment and stuff. And what things have value are like oil, gas, energy, food. If we get to a situation where people start losing their job, I mean, it's already happening, right? We saw the Bitcoin layoffs, other companies are laying off in this sector. And with those kind of things going on, you're going to have more people that at some point are going to be like, oh, crap, I'm going to sell my crypto to go buy food or to pay the rent or survive. And so with that kind of thing going on, I can only imagine seeing more pressure on this. And the other thing to keep in mind is that given the crypto situation, this is on the younger kids. And so a certain percent, I assume, are still living in their parents' basements, but a certain percent are not. And those that are not have to really, I mean, maybe some can move back in, but they really have to actually may need that money now. So things are changing rapidly with the way the Fed's moving and the inflation and the whole thing. Well, that's it for this one. Watch out for them charges. Bye.